this at 5 and start it in the middle. And at the same time, you can control what you want the initial trend to look like. Do you want this one to be, for example, a weak trend? Or if you want to see a strong trend to give you a high rating. So you can also set this at 5. And you have the ability for some assets to set the minimum volume. But let's look at uniformity. You can see that there isn't really a lot of, in this example, in a low-rated uniformity, you don't have a lot of a connection between these tops and bottoms. Okay, you have one that's wide and you have one that's tight. Here, on a highly rated uniformity setting, you can see that there's some uniformity or equidistance between tops and bottoms. So we can start out by setting that at 5 also. And then on breakout strength, you can see that there's a small breakout here, and that's because it's a low setting. And here you have a strong breakout, that's a high setting. So if we set everything at 5, and we keep that minimum quality at 5, we can filter how AutoChartist is going to, which markets AutoChartist is going to look for. So you have the ability to do that. Now, let's stop for a second and ask another question. Okay, and that would be question number 3. Okay, that would be which quality indicators into consideration the even spacing of the turning points that touch support and resistance lines. All right, that's great. We have a very high score here for uniformity. So you understand that point, and that's great. Okay, and we have a 4th question here that's coming up also while we're in this section. And that is, which 2 quality indicators represent the trading action before and after the formation of the chart pattern? So remember, as I mentioned, there are certain ways to look for pairs when you're trying to pair these markets together. Right, that's correct. Large percentage there selected initial trend and breakout, and that's absolutely right. That is the right answer. You want to see, oftentimes what you try to do is set up, you want to see a strong initial trend, and then you want to see this market continue in that direction to get that strong initial trend. Okay, now other components of this area of the chart, of the AutoChartist platform that we're looking for include the interval. Okay, now the interval is important because this represents the time interval of the data in which the pattern was determined. So we have the ability to look at 15-minute all the way up to 1440 minutes, which is a daily chart. And the reason why you want to have control there is, again, it's a personal preference, because the shorter the time period that you trade, you're basically telling the market that you like to have activity, because you are going to see more patterns on a 15-minute chart. Okay, that means you're going to have different trading results. 15-minute traders will have more trading opportunities. Okay, so you're also going to have a different percentage of correct and wrong trades, as well as different percentages of average win versus average loss. Okay, you tend to have smaller swings in the marketplace. So that's one key characteristic, and if you can accept that characteristic, then a 15-minute may be the market you want to trade. You also have the ability to trade a 30-minute, which has, again, it's a low time frame, so you tend to have more swings but less than a 15-minute. So as you go up the time scale, you're going to see different types of patterns taking place on different time periods. Okay, so that's important to watch. Now, when you're dealing with you're also dealing with a pattern that you like. So you may want to see a pattern like a triangle, which shows this compression and a breakout, or you may want to select searches that deal with non-trending patterns that we'll cover specifically in future webinars. Okay, you also see the pattern end. Okay, so the pattern support line starts, for example, when you have this low down here, this bottom, and these two bottoms connect, and a pattern resistance will form, or the end of the pattern will form when you have this top connected to a future top. So once you get that completion of that resistance line and support line, we have an ending date and time, so you know which charts are fresh. Okay, we also have a length indicator, and the length indicator deals with the number of candles of the price charts that are contained in the pattern. So inside here is a 40 candlestick pattern. Okay, now certain patterns warrant that you have long that it spends a long period of time inside a particular inside the support and resistance lines. They tend to have stronger breakouts because the longer a market stays inside of a pattern, the more eyes to get to see it. So when it does finally break out, there's more muscle or more money behind a particular move. So if you're looking at a triangle pattern and you are relying on this compression of these lines to kind of telegraph or pinpoint where it can break out, you certainly would like or welcome a long period of time inside there so you can have a chance to look at it. And also there's an inverse relationship. If you're going to use a short time period like a 15-minute chart, you'd want to see a long period of time inside there. You want to see a longer length. Okay, so that's important to know. All right, we also have this directional indicator, and if you notice when you look at this column here on the emerging pattern side, that you get a gray chart, gray arrows, because we're not sure yet with an emerging pattern where the market can move. When you're dealing with the red or green arrow, that's definitely a sign that it already made its move. So in this case, the market broke through support, headed towards the forecast zone. So on this New Zealand dollar, US dollar, on 60-minute chart, it's showing that the arrow is down. Okay? And then finally we have trend change here, and this represents reversal and a continuation. There's only two things that can happen. And how this works is that if the trend was up, you could see there's a slight uptrend in the beginning of this pattern, and the market breaks through support, then it's a reversal pattern. Okay? It would help if you had a longer term view of this market and you could see that the trend is down, for example, on a or trend is up, for example, on a chart, and then there's a short period of time where you have this sideways action, and then the market picks up where the original trend left off. So that would either make it a continuation or a reversal pattern. So you want to try to look at this indicator in relation to a bigger picture. And that means that you may want to have a 1440-minute chart combined with a 60-minute, or you may want to use a 240-minute combined with a 60-minute, or even a 15-minute and an hourly chart. So if you can find combinations that can help point you in a direction as to whether this market's going to be continuation or reversal, that also helps. All right, so that pretty much covers the these quality indicators and these key indicators. So finally we get down to the forecast zone, and the forecast zone is a mathematical algorithm that gives you a suggestion of where the market can go based on the previous pattern. And you can use this in combination with other tools that AutoChartist has, and we'll get to that in a second after this question here. Okay, we have a next question. It's a true or false question. Okay, the question is, length measures the time interval of the data on which the pattern was identified. You see that clicking on this length icon, this little eye here, you can see that length is the number of candles of the price chart that are contained in the pattern, and interval is the time interval of the data on which the pattern was identified. Okay, so we had a good response there, but it looks like you have to be clear on that there is a difference between the interval and the time period. So again, if you have a question on that, go to the I button and you can select whether what the definition is and what you're looking for. And again, the key working with interval and length is that you want to make sure that if you are using small time periods, that you have to be aware of there's going to be a lot of trading activity, and that you can have a different trading profile than if you trade longer term time periods. So that's a key factor. Now moving on, once you see these patterns you're going to have, again, the emerging pattern, which is important to swing traders, and they are basically the setups. Okay, and then once we have the setup, there's a breakout of that setup, and that gives you a completed pattern. Okay, so that's the key features there. Now, inside of a pattern, you get important data that has been accumulated over time by AutoChartist, and that includes a price range forecast, for example. And a price range forecast is going to show you how much a market is, or how a market can move based on a 15-minute, a 30-minute, all the way up to a daily increment. So this gives you an idea of how much volatility or how much risk you may have to face in taking a particular trade. So, for example, if you entered a market on the short side at 77.90, okay, that's going to tell you that you may expect 10 points of heat or 10 points against you, all right? And if it went beyond this, that maybe the trade's wrong and that you could face an even larger loss. And at the same time, if you went down to the 77, 75 area, that would tell you that you're pretty much reaching what is expected in this market, and that it may be a time to take the profits. Now, this indicator here can be used in combination with this forecast zone to give you an idea of where the market can go. So if you see overlap between the power stats and the forecast zone, then that can give you an indication that that's a very powerful area. At the same time, you can also look at movement per hour. So you can see that at various hours throughout the day that there's larger movement. Okay? And so, as I mentioned earlier, you want to have volatility. So if you have wide markets, trading, then what can happen is you can you're going to have heavy volatility. If you have tight markets, then you're going to have low volatility. So any of these breakouts work better, obviously, when there is a very strong volatility. And at various times during the day, you're going to see that no matter what you do, that the volatility is just so low that the pattern may not work. So this little indicator here in Power Stats, will tell you or pinpoint you into times a day where you want to be more active, and they tend to be towards openings and also towards closings. And finally, also the day of the week. Okay, certain days of the week trade better than others, and also you can combine that with a calendar that shows you the days of the week where important reports or market moving reports are going to come out. Now granted, it seems like today with today's fundamentals going on in the currency markets that you can get movement at any time. Okay, and what we're trying to do is, what I'm saying is that if you know that a specific report, so for example, a U.S. unemployment report was going to come out on a Friday, first Friday every month, then you'd want to look at that, and you'd want to look at how much a market's expected to move on Friday, and kind of give yourself an early or a little